Question number 4. Okay. Nick is a trader. Her financial year ended 31st March and she made the trial balance but contained the error. Why contain the error? Because you saw the suspend account. So some of the item correct, some of the item is wrong. So what is the general rule for the trial balance? So I go through with you first before we do the question. So the general rule for the trial balance. So debit, we have the asset, expenses, drawing. That is general rule. In the credit side, we will have the liability, capital, revenue, and the other. Okay, another section in the debit side, is a cost of sales. We split the expenses from the cost of sales for the trading account. Okay, here feature and equipment is a non-current asset. Provision for depreciation of feature and fitting also non-current asset, but it will reduce the cost. So this provision by right should be in the credit side. Inventory is asset, so should be debit side. Trade receivable asset should be debit side. Provision for doubtful debt, provision, so long as a provision account, should be in the credit side. Petty cash, correct. Bank overdraft is a liability, so it should be in the credit side. Trade payable, correct. Liability, credit. Capital at first, this is the opening capital in the credit side. Sales in the credit side, correct. Purchases, correct. Brand and rate. Office expenses, general expenses. These all the items are expenses. Purchases is under cost of sales. So now we can identify all the account. So the question is saying that the value of inventory on 31st March was included in the trial balance. On the 1st April 2020, the inventory was valued at 0. So this inventory in here is a year-end inventory. By right, year-end inventory should not be in the trial balance. So for the inventory, we should take the inventory, opening inventory, not the closing inventory. Okay, so take notes for this adjustment. On 30th March 2020, a motor vehicle was sold at book value 2750. The disposal was correctly recorded, but no entry was made in the account of purchases. The purchases was expected to pay the amount due on 30th April 2021. So this is our omission, one side omission. So the disposal correctly recorded, but no entry was made in the, so here they say that this feature and fitting motor vehicle, here don't have motor vehicle. Okay, this one dispose done. That means they do all the disposal account, except the purchases account we did not do. So there is a one customer we didn't record it. Customer is an asset, so later on we need to take note about this adjustment. Okay, now go to the feature and fitting. This is a cost. Cost is that asset, non-current asset in the debit side. So 300,000 should be in the debit side. Whereas provision account should be in the credit side. So 12000. Okay, the next one, inventory. Okay, this inventory, be careful. We only should take the opening on at 1st April 2020, not the closing inventory. So take notes that the inventory we should take is opening 8800 in the trial balance. Okay, trade receivable should be in the debit side because it's asset. Trade receivable 16100. And then provision account always in the credit side. Provision account always in the credit side. So 322 should be in the credit side. And then petty cash. Petty cash is an asset. So current asset. So 100 should be debit. And bank overdraft is a liability. Liability should be credit. So this is a general idea. So trade payable, also current liability. Trade payable, current liability. So this one is 3200. Okay, now next is that capital. Capital always must be in the credit side. So capital 16000. And then next is that sales. Sales is a revenue. Revenue is in the credit side. So 498. Okay, now next is that purchases. Purchases is a cost of sales. Cost of sales is in the debit side. And then rent and rate is in the debit side, 16,000. And then office expenses, also expenses in the debit side. And then general expenses, 8150. So this is the amount that we have. Okay, one more item. What are the items that miss out? Which is this one. The purchaser was expected to pay the amount due on 30th April. This is not yet received. So this amount we should record as other receivable. So this amount is asset. We're going to collect in future 2750. So this is the amount that we collected. So now we calculate, see whether our subtotal tally or not, debit and credit. Okay. If the debit and credit are tally, that means we should not have the problem for these two. This corrected trial balance should be correct. Okay. Now next okay, here they say that after that she discovered the following error. The total of general expenses column of the petty cash. Okay, let's see what is the question. They asked to prepare journal entry to correct all the above error. So let's redo the adjustment. Okay, this, let me, okay, narrative are not required. Okay, number 1. The total of general expenses column of the petty cash book 32 for the May 2020 has been posted to the office expenses. This is the same class but wrong account. This error is called error of commission. So we just need to adjust the account. We have to put back the correct account. Put general expenses and reverse the office expenses. This is a wrong side, a wrong account, same class. So 32. Okay, narrative not required, don't need to write the reason. A payment received 75 from Anya, a credit customer, has been credited to the sales account. So amount debited correct, only the credit side is wrong. So we have to reverse the sales and put the Anya. So the double entry is debit sales, credit Anya. This is to reverse the wrong entry in the sales account to put back the correct account in the Anya. Number 3, a credit purchases 100 from Samir has been omitted. Omission. Put back the double entry, debit purchases, credit from Samir. Samir is not giving the goods, so 120. Number 4, a check payment 19 for office expenses has been recorded as 91. So this one is a expenses account recorded 91. That means expenses is overstated. So expenses overstated, we have to reduce the expenses. So credit office expenses. And how much the amount that we need to adjust? Take 91 minus 19. 91 minus 19. So it's 72. So another account to be recorded. This one is payment made by check. So we reverse the bank. So they did not go through the suspend because this is not under the suspend topic, not under the suspend adjustment. So this is debit bank. the first recording made wrong in the cash book already. Question 5. An invoice for office cleaning 235 has been debited to the feature. This is an error of principle. Okay, error of principle, we had to change into the reverse the wrong account, which is we reverse feature and equipment because we wrongly debited to that. So credit feature 235 and then debit the correct account, which is the office cleaning. Office cleaning is the office expenses. Since that they've given us only office expenses, we put office expenses. Okay, so now this is all the adjustment that we have made. Now the question saying that complete the following by place a tick to indicate the effect of the correcting error, each error 2 to 5. So the first one they show it to us. So I'm going to bring it down so that we can see the impact on the adjustment. Okay, now let me show you how to see the impact. Okay, first one, capital. So capital got two impact. How we see the impact? Capital, we can use the accounting equation, asset minus liability concept, or we can use the capital also equal to opening capital plus the profit minus the drawing. So these two equations we can use to find the impact. So now the first one, debit general expenses, credit expenses, both also expenses. Both also expenses. Expenses increase, expenses decrease. So eventually, no impact. So here they say no impact. The second one, debit sales, credit the ANYA. So sales is a income. So when we debit the income, so this debit sales, the sales reduce. Sales reduce, profit will be reduced. Profit reduce, capital will reduce because here reduce, here will also reduce. Follow the sign for it. Next, number 3, purchases. When purchases increase, cost of sales increase. Cost of sales increase, gross profit decrease. Gross profit decrease, profit will be decreased. So this one will be decreased. Next is that office expenses. Office expenses is expenses. But when we credit, so expenses decrease. When expenses decrease, profit increase. Profit increase, capital should be increased. So this one should be increased. The last one, debit office expenses. Expenses debit, expenses debit, expenses increase. Expenses increase, profit decrease. Profit decrease, capital will decrease. So this answer should be here. Okay, that is for the question number 4 that I'm sharing. So we're going to do the question 5.